So welcome back everyone. So in this particular session, let me set the agenda for today, and whatever time that you're going to spend with me, we are going to go through the entire set of amendments that are applicable for your May 2026 exam. So all of you guys writing May examination, you know that there has been bunch of amendments that you have for your exam. None of the amendments are scary. All you have to do is keep your full attention and then try to watch the session start from the end. And then whatever I'm going to work out here, you're also required to take a note of that. If you do not have the printout of this, I would recommend you later take the printout of these notes that you can see here. You can download from the link that I've shared with you, or I will put or you can directly go to the Taxschool website, and in free resources, I've given this in the CA Inter part. For both inter and final, the amendments notes are there. So what you do is that you know that in your examination for taxation, amendments are considered to be one of the top class priority area, which means you shouldn't be going to the examination without looking into the amendment separately. So whenever I'm discussing an amendment, I'm also going to do this part wherein I'll think over and I'll tell you how these are going to be tested in your examination. That kind of an approach is also mandatory for you to ensure that you get the maximum marks in this particular area. Okay. If you have any doubts on whatever we are discussing, you can either ask while the live is going on, or you can ask on the Telegram group. I'll separately answer those. Okay. Now I'll tell you how you can utilize this particular session in terms of your understanding. Now, if you look at your notes here, you would find that I have given in each chapter what is the amendment that has happened. Now, each of these amendments, you can see that I have even mentioned Jan 26 amendment as well as May 26 amendments. Both of these amendments are included in this particular notes. You would already know that Jan amendments is given in here because sometimes at your intermediate level, the institute go and then ask questions from one amendment prior cases also, which means if they're asking May exam questions, sometimes they'll test you from Jan amendments which are not tested in Jan examination. So it's important that you club and then learn this together. So I also want you to have a chapter wise understanding of amendments. That's why I have prepared this note, so that even if you are somebody coming from my classes, okay, you've attended online or offline classes of mine and wanted to have a separate understanding of amendments, you can still use this. And if you have my previous editions of the books, so I've written here that if you have any books before our 11th edition, now we are putting numbers for the edition. If your book doesn't have an edition number, which means that you are from prior to 11th edition. Now if you have 11th edition or before, okay, 10th edition or any of the old editions of the books, you can actually go ahead and then print this particular amendments and keep it with you instead of you holding that new book. That's also a method I wanted to tell you to prepare for it. But I'll recommend watch this. Also, if you want Jan amendments to be separately discussed, watch the Jan amendments video as well. Jan September, there's another amendment video that I have put it on my YouTube channel. You can watch that also. Now our session would be primarily covering May amendment. Now why amendments are slightly important for me, because you already know that on 22nd of September 2025, that's when GST 2.0 was released. Now whenever that radical shift in GST happens, we will definitely have some changes that will be reflecting in your examination as well. But since GST 2.0 was primarily a change in rate, and rates are not part of your syllabus, all these rate changes are not something that you need to prepare for your examination. So you don't have to worry about it. There are some other changes other than rates that are relevant and will be applicable for exam, and that's what we will discuss here. I'll also touch upon your amendments and understanding of GST 2.0 for the sake of general clarity to you. Please understand that whenever your examination, be it September exam or Jan exam or May exam, you will have 6 months prior amendments applicable to you, which means if you are writing May exam, all the amendments which are effective, not just notified, which are effective until 31st of October will be the one that is applicable to you. So if you are writing September exam, additional amendments you might have to look at from 1st of November till again another 4 months of amendments, November, December, Jan, Feb, because 6 months ends by February 28th. Likewise, if you look at your Jan exam, you'll have to look at amendments until June 30. So from February till June, you will have to look at additional amendments that has come. Now with this introduction, let me directly jump on to the amendments part. First of all, let me give you an introduction to what was happened with GST 2.0 changes. So if you look at your chapter 1 and 2 amendments, I can call it chapter 1 precisely. This is what I have written here for you. Let's go ahead and then read it, and then we'll try to understand. We know that GST 2.0 has come. What was prior to GST 2.0 the structure of rates we had in India for GST? We know that we were in a segment of 4 rate structure. How many rates? 4 rate structure. From the 4 rate structure, we have now moved to a 2 rate structure. As per government, even though there is a sin rate of 40%, government says primarily my 4 rate structure has now been reduced to 2 rate structure. What was it? The earlier rate that was applicable used to be 5%, 12%, 18%, 28%. And goods were generally taxed at 12%, services were generally taxed at 18%, some necessary items were at 5, and some luxurious items were at 28. What they have done, they said now we will only have two rates, 5%, 18%. However, some sin and luxury products, handful of product, were put under 40%. So how many rates we have now? 3, but 2 general rates, 1 special rate. This is the structure that we have. Is that clear, all of you? Whenever you are clear about something, to give me affirmation and confirmation, I would recommend that you chat with me on the comment box or chats and you confirm me yes, then we will go ahead with the next topic. I hope this is clear, the rate change. Okay. Now let's look at, because of the rate change, there is a big change that has happened with compensation cess. What was the structure of compensation cess? GST compensation cess was something, but when GST was introduced, all the states and went on to make an issue out of it, saying that, see, if you are changing the GST or changing to GST, the states are going to have a loss of revenue. Why? Because only consuming states are going to get the revenue, not the producing states. In the past, taxes like central sales tax were paid to producing state, not to consuming state. So all these producing states were at a losses, saying that we are going to lose a lot of revenue because of your GST introduction. To compensate this, to compensate this, the central government had to step in and say that state government, do not worry, whatever may be the taxes that you used to collect, until what time? Until the introduction of GST. When was GST introduced? 1st of July 2017. Until 1st of July 2017, the states used to collect value added taxes, central sales taxes. At that time, some revenue would have been clocked already. So they would have recorded, okay, this is the revenue that we got until GST on a yearly basis. From this revenue, they will look at a reasonable increase. If at all, say I'm to give you an example, let's assume that Tamil Nadu government used to get 10,000 crores as VAT and CST revenue before introduction of GST. They're saying that around 14% of compounded annual growth will happen naturally because the GDP is increasing. Normally also the revenue of Tamil Nadu would have increased. Now 14% increase, if I look at for 10,000 crores, it would have become 11,400 crores naturally, right, on a monthly basis. What happened because of GST is that Tamil Nadu government could collect only 10,200 crores instead of 11,400 crores, which would have been the ideal revenue if at all GST was not introduced. Now, if you compare this, there's a 1,200 crores loss. And who promised to compensate this? Central government promised to compensate this. Now, central government is also losing money because of introduction of GST, right? GST rates are actually less than the older rate is what we generally understand. So they're also losing money. Now, how will central government compensate the state if they're not having an increase in revenue? For that, they decided to introduce a new additional GST on certain sin and luxury product. And this additional GST was used as a compensation to compensate the states for any loss of revenue. This amount that was used for compensating the states was collected in the name GST compensation cess. So some products were having something called as compensation cess. Apart from GST, there was something called compensation cess. Now, this was used for compensating the states for any loss of revenue. Like I said, Tamil Nadu government 1,200 crores, central government will collect this extra taxes on certain product, like say for example, motor vehicle, tobacco, pan masala. They were collecting extra taxes. They will use this revenue not as a common revenue of the government. They will use this to compensate the states. This was the structure that we had. How many years of compensation was promised? Can you guys tell me on the chat box how many years of compensation was promised to the states? How many years? 5 years of compensation was promised. Okay, states were going to get 5 years of compensation. So 5 years got over by what date? 30th of June 2022 is when 5 years got over. 1st of July 2017 plus 5 years is 30th of June 2022. By 2022, compensation, central government said no more compensation for the states. Hey, states, you will not get any more revenue because 5 years got over. However, whatever amount projected, government thought they will collect so much of revenue from the point of view of compensation cess to compensate the states, but they could not collect that much. Also, it could be other way around. Government thought only this much state will ask for a compensation, but states asked little extra. So government's planning went off and then they could not pay the state government for the compensation of the losses. So what central government did? Naturally, when you don't have enough money to buy a house, you take a home loan. Likewise, central government had taken a loan to compensate the states. To repay this particular loan, they said we will continue to collect compensation cess till 2026. However, what happened is by 22nd of September 2026, government decided to change the GST rate to a complete new type of rate. That's when government decided that we will remove compensation cess for most of the product except some product which we will remove by 2026 March 31st. Now, if you look at as of today when I'm speaking, even for these products that compensation cess was collected till 2026, those products are also outside the levy of compensation cess, and all of those products are going to be levied with some other taxes, not anymore compensation cess. So what's understanding that we have? By 22nd September 2025, the compensation cess on most products are removed. By 31st of March 2026, all the product compensation cess are going to be removed. So I'm highlighting two dates here. What are the dates I have highlighted? 22nd September, most product cess is gone. 31st March 2026, every product cess is gone, cess is no more there. State's compensation was already over by 5 years. Now central government is not collecting. That's why most of the products we have, wherever cess was applicable earlier, we have a new rate called 40% introduced. Now I will read the topics that I have written so that you understand and you read it with me. Now read on the summary notes that I have given for compensation cess. Compensation cess is imposed under GST Compensation to State Cess Act 2017. For what purpose? To compensating the states for loss of revenue. It applies to what kind of product? Applies to luxury items and demerited goods like pan masala, gudka, cigarettes, chewing tobacco, products like zarda, unmanufactured tobacco, BD. It is also calculated on the value of supply under section 15, which means if I have 18% GST and I also have 20% compensation cess, it is not like this 20% is calculated on 18% GST. This 20% was calculated on the value itself, which means if I say I have 18% GST and 20% compensation cess, it is as good as telling that I have 38% GST itself, right? So cess was nothing but an additional GST. This is your understanding. Is that clear to all of you? Okay, so this is on the valuation part. Why was compensation cess levied? The revenue of the same is used for compensating the states. For what purpose? For loss of revenue due to introduction of GST. Initially, it was imposed for 5 years until June 30, 2022. Later, it is extended till March 31st, 2026. However, states were eligible for compensation only 5 years. Collection of cess was going on for how many? Until 31st of March 2026. However, By 22nd September 2025, GST 2.0 changes came. Compensation cess is removed for most product except the product I mentioned in this point, right? Because a lot of product earlier compensation cess was applicable, they introduced a 40 percentage tax rate instead of 28% and cess. Now there is no cess, 40%. Example, a luxury car today is taxable at what rate in India for GST? It is 40%. Instead of 28% GST and another 25% compensation cess, that kind of structure is gone. Only 40% GST is going to be levied. Is that clear, all of you? If it's clear, can I have a quick yes on the chat box? Now, I want a yes from everyone. That will give me a lot of understanding that all of you guys are carefully listening and then trying to understand each and every point that I'm speaking in this session. I am going to move to chapter number 3, which talks about charge chapter. Let's try to understand what is the changes that we have in charge chapter. If you look at in charge chapter, we have reverse charge mechanism on GTA services. We also have reverse charge mechanism on renting of motor vehicle. If you carefully look at, is there a change in RCM for GTA services and RCM for renting? I would say no, there is no change. However, since the tax rate of 12% is no more in GST. Why? Now the tax rate of 12% and tax rate of 28% are removed as a rate from GST. Instead, we have what? Instead, what kind of a rate is applicable? It is either 5% or 18%. You guys understanding this? Okay. Now, because you have 12 percentage no more, there used to be an FCM rate of GTA services and renting that was applicable at 12%. Both of them are now going to be replaced with 18%. Now that I'm talking about GTA services and renting of motor vehicle, I will use this opportunity to give you a quick recap of the entire understanding of GTA and renting of motor vehicle. If you guys are coming from Taxschool education from our classrooms, you can open your book and then try to recap this with me. Or if you're coming from some other classrooms, I would also recommend that you try to listen to me carefully and then try to recap from whatever learning that you have. ICAI material is also a great tool that you can open and then try to learn this. So I'm taking your all books so that you understand that this is a change. I will discuss the recap notes that we used to use for GTA. It's my page, it's 37, the older book. Either way, it is fine. Now, this is the summary of GTA understanding that we have under GST. Carefully listen to me. You might use this opportunity to recap the entire GTA. Now, when would I call transportation of goods by road as GTA? There is a specific document that needs to be issued to call something as GTA. It is consignment note, which means I wanted to take out 10 sacks of paddy from my house or from my warehouse, or 10 sacks of plastic items, or 10 sacks of some other item. I wanted to take it from my warehouse to the market. I am calling up a rickshaw truck or a pickup truck to come and pick it up for me. I would not automatically call this pickup truck as GTA, right? So yes, there is another amendment called local delivery. It is not GTA, it's completely different. I'll come to that. That's a separate discussion, Atul. Thank you for pointing it out. Now carefully listen to me here. I'm talking about GTA. GTA is a specific understanding we are talking about. Wherever you have consignment note that is being issued, I would call this transportation as GTA. Now, normally, if I'm taking goods from my factory or my house to the market, I would call up an auto rickshaw. I might call up a pickup van. These are not considered to be GTA because these people will not issue a document called consignment note. What is a consignment note? It's an extra document wherein they would say this is the consignor, this is the product, this is the consignee. From where I'm picking, what product, to where I'm going, how many kilometer, how much is my charge. All these things are given as a consignor with a responsibility on the goods that they take. If it is not there, if that document is missing in your goods transportation as a service, then we would not call this as GTA. If I do not call this as GTA, if you take any goods by road, only three things are taxable today. One is any things you take by road, only three things are taxable today. One is GTA. Second, courier. Third one, the latest amendment, local delivery. Only these three things, if local delivery also through e-commerce operator. This is the only one that is taxable. Only these three things taxable. Which also you can understand that normally if I take goods from one place, point A to point B, by using a rickshaw truck, by using a pickup truck, it would rather be exempted. It would rather be exempted than taxable. But GTA is taxable in some cases. Some cases it is even taxable under RCM. Now, how do you decide on taxability of GTA services and what's the change we have? Now, it's a two-step process by which we used to make this decision on GTA's reverse charge applicability. First, we should look at, see, whenever we talk about charge, we are basically asking the question, who has to pay the GST? Is it the supplier who pays the GST or is it the recipient who pays the GST? Now, to ask either supplier or recipient to pay GST, first of all, it has to be taxable, no? So that's why my check number one on GTA services is not RCM or FCM, it's rather whether it is taxable or not. Because GTA services also, I told you, transportation of goods by road is mostly exempted other than GTA and courier and local delivery by e-commerce. Even then, GTA also has some exemptions. When would it be exempted? That's it. If the recipient is other than specified person. Who's a specified person? I have a code word for specified person. Any of these constitution are the ones who is actually receiving the services from a GTA, then only it will become taxable. Other than this would be exempted. Who are these BPL scarf to whom when GTA providing services would it be taxable? B stands for body corporate, P for partnership firm, L for LLP, S for society, C for cooperative society, A for AOP, R for any registered person including a casual taxable person registration, F for factory registered under Factories Act. These many people, I'll repeat it once again for your understanding, body corporate, partnership firm, LLP, society, cooperative society, AOP, registered person, factory. If any of these people, are the recipient, then it would become taxable, which also means what? If the recipient is not any of these people, right? If the recipient happen to be other than any of these people, it could actually be exempted, right? What is the meaning? Who could be other than this BPL scarf? An unregistered individual could be other than BPL scarf. An unregistered HUF could be other than BPL scarf. If they receive services from GTA, I can say that it would rather be exempted. Second, what if the recipient happened to be registered only for TDS under section 51? Who could be that? It's a registered person. It might come under this category of R, but in GST there are multiple type of registration. If they're registered only to pay TDS only, no other registration they have. They have a registration in the drop down they have selected while applying for registration, a tax deductor registration. Who will take tax deductor registration under section 51 in GST? There are 7 set of people who will do that. Establishment of the or departments of the government, local authority, government agencies, public sector undertaking, entities which are having 51% or more from the governments as an equity, society set up by the government, registered person receiving metal scrap. These many people are the people who are under TDS under section 51. Now they're saying that If at all the recipient is only registered for the purpose of TDS and they do not have any other registration, these people will not be considered to be, who will not have any other registration, say government or panchayat or municipality, they might have only a TDS registration because they do not provide any other supply, no? So they might not have any other registration. So if it is panchayat, municipality, government which has only TDS registration, do not consider them to be BPL scarf and then ask them to pay tax under RCM. Instead, it will be exempted. Then look at the second point here. So I'll recap and conclude the point for your understanding once again. I'm saying GTA services. GTA is first of all not completely exempted. But even with the GTA services, there are some exemption that is available, and first exemption is when the recipient is not a specified person. Second one, they are registered only for TDS, and if they are, even if they are BPL scarf or specified person, there could be some exemption available if the transportation is of random 5 goods. If GTA is transporting random 5, there could be an exemption for that also, right? The transportation charges could be exempted. What is random 5? This is one code word that you should remember it 100% in your CA intermediate, because this is something that could be tested in your examination. R stand for relief material, A for agriculture produce, N for newspapers and magazines, D for defense and military equipments, O for organic manure, M5, right? Milk, salt, food grain including flour, pulses and rice. These many products if you transport, then there is an exemption. Now, if the answer is no to both of this, which means the recipient is neither specified nor only registered for TDS and they are not transporting random 5, it would become taxable. Whenever it becomes taxable, I have to do the second check. What is the second check? Who has to pay the taxes? It is not outrightly the recipient who will pay taxes. It could be GTA also. When the GTA is opting for FCM, GTA has an option for FCM. In that, we had two rates applicable, 5% without ITC and 12% with ITC. Now, if you look at from 22nd, okay, so you look at here, from 22nd September onwards, there is no 12% applicable. Now, if the GTA wants to go for full ITC means what? GTA will get ITC on their purchases. What is the purchase that the GTA might do? GTA might go and purchase a pickup truck. Whatever GST paid on purchase of pickup truck, they can take an input tax credit. When? Only if they have gone for what rate under FCM? 18% under FCM, not 12%. 12% is no more applicable. Are you guys understanding the structure here? However, if GTA does not opt for either 5 or 18% FCM, it will be payable by recipient, which is BPL scarf, at RCM 5%. Is that clear, all of you? Are you guys understanding the structure? If it's clear, can I have a quick yes on the chat box? So what is the only change that you have? I have recapped the entire point for you, but the only change that you have is the 12% is increased to 18%. Okay. So you can say GTA who chooses to pay tax under FCM can opt to pay GST either at 5% without ITC, or instead of 12, it is now what percent? 18% with ITC on inward supply. Similarly, we have renting of motor vehicle also put in here. In our earlier notes, it was page number 49, but I'll just give you an understanding of this again. Renting of motor vehicle, again, if you look at, had some case of RCM, some case of FCM. Now, if the anybody who is renting the motor vehicle could go for full input tax credit on their purchases, which means if they are purchasing motor vehicle or they are having rent paid on their corporate office, they could take input tax credit. If they go for an FCM, there was a choice for people who are renting motor vehicle, wherein cost of fuel is also part of consideration to go for FCM. To go for FCM without any question, they had to be at 12% in the past. Now this is also, there is no 12% applicable in GST, so it will also be what rate? 18%. So we can now say that if the supplier of renting of motor vehicle opt for 18% tax rate, there is no question needs to be added, because we know that it will be taxable under FCM. Then when it will be taxable under RCM, the recipient should not opt for 18%, which suppliers should not opt for 18%, which means that they will be at 5%. Then there are two more conditions for RCM to be applicable. What is it? The supplier should not be a body corporate. Supplier is other than body corporate, and recipient is a body corporate. Then RCM. All other cases means what? Supplier is other than body corporate and recipient is also other than body corporate, or supplier is a body corporate and recipient is anyone. This case also we will have 5%, but it will be FCM, right? So what is our change now? We have your complete FCM with ITC rate for renting of motor vehicle designed to carry passengers. Cost of fuel is also part of consideration, is increased from 12% to 18%. Is that clear, all of you? Both of these understanding, I hope, is clear. You guys with me on this? Okay. Next. Now, local authority. They have added a definition to local authority, and we already know what is local authority. It is panchayat or municipality. Municipality also could be municipality or municipal corporation. Both of them are considered to be local authority in all our GST discussion. Now, they also said not just municipality or panchayat under constitution, even whatever fund that is set up by them, okay, will also be considered to be a local authority. What is the understanding of this? Sometimes what happens, say Kochi municipality, Kochi Municipal Corporation or Chennai Municipal Corporation, they might put out an additional committee, allocate certain fund to them, and then ask them to do a specific task. Who will be part of this committee and fund? It will be one of these members, councillors, and president, and all that will become part of that committee also. Will the committee that is getting a municipal or local fund also be considered to be a local authority? They said yes. That's the third part. You look at a municipal committee, Jilla Parishad, district board, or any other authority legally entitled to or entrusted by central government or state government with the control or management of a municipal fund or local fund is also treated as a local authority. What is the meaning of local fund? What is the meaning of municipal fund? What is your examination thought process that you have? Wherever we are using the term local authority in GST, we should now include and keep it in our mind, even a local fund or a municipal fund could also be considered as local authority. Right? So any kind of committee that is set up by central government, state government with control or management of a local fund or municipal fund is also local authority. Local fund means any fund under the control or management of a local self-government established for discharging civic function in relation to a panchayat area, vested by law with powers to levy, collect, appropriate any tax, duty, toll, cess, fee by whatever name called. Municipal fund means any fund under the control of an authority of a local self-government established for discharging civic function relating to a metropolitan area, here panchayat area. Local fund is a panchayat area fund and municipal fund is a metropolitan area or municipal area fund. Right? They are saying that it is nothing but any fund under the control or management of panchayat or municipality. That's simple. For your exam, it's a very simple learning or memory that you need to have, which is local fund means under the control of panchayat. Municipal fund means under the control of municipality. Now, why this is relevant in GST? I will consolidate. There are multiple areas. Okay, so if you want, you can make a summary note of this. There are various areas where in GST word local authority is being used. Wherever we use that, wherever it is used, local or municipal fund will also be included. Now let me consolidate it for you. What are the areas where it is being used? Look at charge. We have said a business entity providing services. Sorry, opposite. A local authority providing services to a business entity is taxable under what charge? It is under RCM. That's it. Except for some cases of government like Indian Railway, Postal Department, vessel and aircraft, transportation of goods or passenger. Except for these four, all other services by government or local authority to business entities under RCM. This RCM will also be applicable for what? When I say local authority here, it would include local fund and municipal fund. That's your understanding. Is that clear, all of you? This is one area. Second, when local authority is renting commercial property to a, not a business entity, here the word is registered person. It would be taxable under what? This is also taxable under RCM. Here also, instead of local authority, they can use what word? Local fund or municipal fund. So they are not going to ask you what is local authority in the examination. They're going to give you a case wherein you should identify that local fund or municipal fund is as good as local authority and apply the GST provision accordingly. Next is an exemption. You've learned that when a third party is providing either pure labor or composite supply, wherein value of goods is less than or equal to 25%, to a local authority. For Article 243G or 243W functions. It is exempt It's exempt. Here, when I say local authority, it includes what? So instead of providing to local authority, they can include local or municipal fund. So these are the some examples wherein I'm saying that wherever we read local authority in our GST, we should now include local fund and municipal fund. If this is clear, can I have a quick yes on the chat box, please? Okay. So these are the changes that we have in charge chapter. We do have some more changes, but that is actually from our earlier discussion. So Jan changes, you can always refer to our Jan videos for your understanding. Okay, so we have 9-5 changes, but I've kept it in TCS so the discussion can be together. Now let's move to the next chapter, which is exemption chapter, and then try to see what is the changes that exemption chapter had because of GST 2.0. So in exemption chapter, we have couple of amendments that is there, which are very important for your exam. It also has some connection to some other amendments that we are going to discuss further. So be carefully listening to this amendment and then try to have full clarity on it. Number one, I had already talked about this while I was discussing about GTA's amendment. Now there is a small change that has happened with respect to the exemption relating to transportation of goods. Let me take you through the entry that came on 22nd of September. Earlier, the exemption for transportation of goods were read like this. It said, services by way of transportation of goods by road except service of GTA or a courier agency are exempt. Which means what? In terms of transportation of goods by road, only GTA and courier, only these two were what? Only these two were taxable. All other things are exempt. Now they said they have added an explanation to this and said nothing in this entry, which means what? Nothing in this entry means nothing in this exemption shall apply to local delivery services provided by an electronic commerce operator who are like providing you. Say if I start, who's an electronic commerce operator? It could be a mobile application, mobile app. Here eco means a mobile app or a website. Say I'm doing a transportation of local delivery service through a mobile app or a website, or local delivery services is provided by a third party, but it is provided through my website or a mobile application through an electronic commerce operator. They are saying that is now going to be taxable. Now this learning has to be learned together with our understanding in 9 subsection 5. So what you should do is should learn this together with 9.5. So you should ideally go to page number 15 in your exemption and then read this also. You can see a new entry is introduced under 9.5. What is 9 subsection 5? These are talking about cases where who pays the taxes? E-commerce operators are required to pay taxes. That's it. Now local delivery services are going to be introduced under 9.5, wherein when the actual supplier is not liable for registration, it will be for the local delivery services. If the actual supplier is not liable for registration, it is the e-commerce operator who is liable to pay the entire GST. This is the understanding they are putting across. Only if the supplier is unregistered or not liable for registration. Now there are few FAQs also. We will read all of this together. Then I will consolidate and then put you through a case study so that you understand end to end for your exam. Can I do that? Okay. Who is liable to pay GST for local delivery services provided through e-commerce operator? That's it. Services by way of local delivery service through e-commerce operator where the supplier supplying such services not liable to register under 22(1) will be covered under 9(5). In such cases, liability to pay will be with e-commerce operator. What is the rate applicable for local delivery? It is 18%. If such services of local delivery is supplied directly, 18% is payable by that person. If it is through e-commerce operator who is not liable for registration, 18% is payable by e-commerce operator. If it is supplied through e-commerce operator by a registered person, GST is payable by supplier of local delivery services and registered person supplying through e-commerce operator. That will also be under FCM normally. Whether e-commerce operator providing local delivery services are covered within the scope of GTA? They said no. GTA also they have now clarified that GTA will not include an e-commerce operator by whom the service of local delivery are provided or an e-commerce operator through whom the service of local delivery services are provided. So they said local delivery services by or through e-commerce operators are not considered to be GTA, so the RCM provision will not be applicable to them. It will be under 9(5) or it will be under the FCM cases that will be applicable, right? So they said that's not considered to be GTA. There are multiple changes that has come. Now, what is the structure? It's a very interesting progression that has happened with the service. Now, I will make some notes so that you understand this in end to end. What is local delivery service? You have this company called Porter. It has become super popular now. GST department is interested when somebody gets super popular. They feel like, okay, they have an opportunity to collect GST, and that's how these changes have actually come in place. I'll tell you how it has happened. What is that you want to do? You wanted to take the product from point A. So you want to take the product from MG Road. I'm taking MG Road because every place has an MG Road, right? And you wanted to keep, okay, you wanted to move the product. You wanted to move the product from MG Road to some other location. Say if it's in Kochi, I would say I wanted to keep it to Alua. I wanted to pick up the product from, I want somebody to pick up the product from MG Road and then I want to keep it in Alua. Or like if it's Chennai, I would say I wanted to take it to Tambaram or maybe Adyar or some places. Okay, so I wanted to take it from there to there. So it's within the city. Okay, so what are they doing? Local delivery. I take up the service very occasionally to move the product from, like, say, I have some document to pick up from one of my client location and I want to take it to my office space. I would just book the porter like your Swiggy Zomato. Here, what is not there, porter does not give you any food item or anything. It just connects your point A delivery to point B delivery. So it will be like a Swiggy Zomato guy. You can select what product it is. He'll pick up from one place and then drop it at. Swiggy also used to have the services called Swiggy Genie in the past. Now they have stopped up, saying it is not very profitable. Rapido has Rapido Genie, Rapido Parcel, something like that. So they all have these kind of services wherein instead of you traveling, you just asking somebody to do a local pickup of product. Now, who would do the service of transportation for you here? As a customer, you're the customer, you wanted to pick up the product from some, it could be books, it could be food, or it could be any item. You want the product to be picked up from MG Road and delivered to Alua. Okay, your house, for example. So it is within the city. It's a within city immediate delivery. So what do? You open this particular application called Portal. and in from location you will give something, to location you will give something, and then you book. That's what happens. Now you have to pay the charges to this portal app. Now who will be providing you the transportation? It could either be provided by a bike, okay, so somebody who has a box and then sitting in the bike and then doing this for you, right? It could be a bike, motorcycle, or it could be a rickshaw truck, right? Now any of these mode of delivery, depending upon how big is the size, you will pick up the mode of delivery. Two possibilities are there. Suppose this bike guy is unregistered and this truck guy is registered. This guy is Mr. A and this guy is Mr. B. Now these are local delivery. In the past, it was actually exempted. Now, first point number one, the latest change, government understood this portal app is becoming super big. In India, there are crores of money that is being booking is being done through this portal application. So point number one, GST department did what? They have withdrawn exemption available to. So that's the first thing they have done. They said the local delivery services are now going to be taxable with effect from what date? 22nd September 2025. That's it. It's going to be taxable from 22nd of September 2025. All the local deliveries are going to be taxable. This is point number one. Is that clear, all of you? What is that they have done? Okay, I used to commonly quote this in our classes that GST department is like a vulture, like looking for, okay, which industry is doing well so that I can go and collect and grab some taxes. That's how they will look at all the industry, and they found that, okay, this industry is growing in India. Let me go and collect GST. Clear? Okay. They Now, whenever they decide that I wanted to collect GST, they will also be having to decide from whom I will collect the GST. Now, look at who's a supplier here. These are small delivery guys, right? Who's a recipient here? It is the customer like you and I. Can I bring FCM and then expect this unregistered guy is going to pay GST? No, they are not going to pay GST, right? It is not going to be an easy understanding that I will have that this guy is going to pay the GST. That's a wrong assumption that I'm making. An unregistered guy, how will I pay GST? Can I bring a reverse charge mechanism to this? Can I say, okay, the customer, when we book this application, we pay the GST? Impossible. Then they understood that in GST, there is a provision available called 9 subsection 5, which enables GST department to collect entire GST. From whom? Electronic commerce operator. In our example, government said, okay, why should I bother? I have an entity which is coordinating all of this, which is what entity? The portal application. Why don't I collect taxes from them? Because all the booking are done through this application. I already have 4 services introduced under 9.5. They already have 4 services: transportation of passengers, accommodation services, services like your housekeeping, cleaning, etc., like urban company, like your Make My Trip, like your Airbnb, like your Uber, Ola, already there. Then Swiggy, Zomato, restaurant services, all of them are already under e-commerce operator 9.5, wherein the entire tax needs to be paid by e-commerce operator. They said, why don't I bring even porter kind of application also into 9.5? But did they bring it for all the cases? No. They said to, to applicable. It is a conditional applicability. What is the conditional applicability I have? They said First, you look at who's the supplier. Ask the question, is supplier registered? Who's the supplier? Original supplier. I would even write original supplier. Is original supplier registered? I ask this question. Who's the original supplier here? Original supplier is the Mr. A or Mr. B. I have given both cases. Assume the answer is no. Original supplier is unregistered. Then I cannot get it from him. So that's it. 9 subsection 5 is applicable. Who's liable to pay the entire taxes? E-commerce operator is liable to pay entire GST. Which means what? Suppose a customer booked through Mr. A for transportation, it is 50 rupees charged. Rupees 50. That's the charges for delivery. On this 50, who pays the taxes? Will Mr. A pay taxes? No. On 50, full GST, 18% GST is payable by porter application. So you pay GST. So as a customer, you pay 50 plus 18% GST. That is 18% of 50 is rupees 9. 9 rupees is payable by rupees 9 GST is payable by whom? By porter application under 9 subsection 5. Right? E-commerce operator is liable to pay the entire GST. This is the structure of 9.5. The answer is yes. Yeah, they are registered. Then 9.5 is not applicable. GST is payable under forward charge mechanism, which means what? Registered supplier. Is liable for. Registered supplier is liable for GST under what charge? FCM. E-commerce operator might do what? TCS. E-commerce operator is liable for TCS under 52. At the rate 0.5%. That's a normal TCS provision would be applicable for e-commerce operator in this case. So which means, suppose the delivery was a little bigger item, this Mr. B charge 500. Now Mr. B will have to charge 900 plus 90, which is GST at the rate 18%. Now Mr. B will have an outward tax liability of 90, not the porter. Porter will do 0.5%. Porter will do, what is 0.5%? 1% is 5 rupees. 0.5% is 2.5 rupees. TCS. Okay, that will be deposited, and then this Mr. B can actually avail that in their electronic cash ledger, which is a tax collected at source concept. Anyway, I'm not going into that. The question here is it taxable under 9.5 or not? Is it always under 9.5? No, it is under 9.5 when Mr. A is actually unregistered. Is that clear, all of you? Can I have a quick yes if this is clear? This is a very important area, can be tested in your exam. So I want you to have 100% clarity on the same. I'll summarize it. We have learned multiple provision, right? Provision number 1, just a summary, quick one-line summary for it. Provision number 1, We know that transportation of goods by road other than GTA and courier is exempt, right? So which means that if I do transportation services to anybody, it is taxable if I'm using road as a mode of transport, only if I'm a GTA and courier. Now they made a change and they said, no, if you do transportation as a service by road through a e-commerce operator is also taxable. This is your first understanding. I regularly take this porter services. I have a favorite restaurant nearby. I want to pick up food from there. I send porter now. Until 22nd of September, my porter app used to show 100 rupees only for pickup. Now it is showing 100 plus 18%, which is I am paying 18 rupees extra GST. Why? Even though I am taking road transportation, if I call up a rickshaw and then or call up a bike guy to come and then pick that item here, I would have never paid GST. Since I am booking through porter application, an e-commerce operator, it is now taxable. That's your point number one. Very carefully understandable point. I hope that is clear. Then the next question, okay, now it is taxable. Who has to pay taxes? That's it. If the original supplier, who's the original supplier, who's doing the transportation? The the Swiggy bike guy or the Zomato bike guys will come, right? Zomato delivery boys. All these delivery guys who are coming in Zomato, Swiggy, likewise, Porter also has a delivery people. It could either be a rickshaw, it could be a truck, or it could be a bike. Now it depends upon not more what kind of vehicle it is. It depends upon whether they have a GST number or not. If this original person has a GST number, then it would be taxable under FCM. But if the original guy is not having GST number, it will be taxable under 9 subsection 5. What is understanding? If the original supplier is unregistered, full GST of 18 rupees they collected from me needs to be paid by porter application or any similar application to the government directly. This is your summary that you have. But if it is original supplier is registered, they only pay taxes, though the porter application will have to pay GST to them only. They pay the GST to the government so that they can take credit. Okay. Now e-commerce operator will have a TCS provision applicability there. Is this clear? Can I have yes from everyone, because it's an important amendment and I want you to all to have full clarity on the same. Okay. Perfect. So let's move to the next exemption that they have introduced. Come back to the exemption. Look at the exemption that we have here. New exemption is inserted. They have only one exemption came even after GST 2.0, where they said we are rationalizing GST, bringing so much of changes in GST. Just one exemption. That's it. They have brought up. Exempt service I'm talking about. Service is only part of your syllabus. So which service got exempted because of GST 2.0? I've been telling you guys in classes multiple times that insurance has been a long overdue case which needed to be exempted. Now you have an actual new exemption applicable for insurance services. Now is it entirely exempted? No. What is the wordings that they have? You have multiple type of insurance. As an industry, insurance can be divided into life insurance and general insurance, right? First of all, you look at, was it fair to collect GST on insurance? In my personal opinion, I am never in favor of collecting GST on insurance. Why? Look at health insurance for that matter. In India, the government system of insurance is not that good. Okay, government system of healthcare is not that good. Go to government hospitals, they do not give you the best of care. Their facilities are not very good. Now, government is not providing you the best of healthcare in the country. But if you want best of healthcare, you might take a health insurance. But government says, I want 18% of that. How bad is that? Government realized it. It became a political issue. They came up with an exemption. That's all happened. Over the period, they said, let the the group of ministers, you guys study this, study this. It was postponed. Finally, in GST 2.0, they came up with an exemption. What is that they said? Service of life insurance business provided by an insurer to the insured, where the insured is not a group, is exempt, which means all the life insurances will be exempt except employee group life insurance. Very recently, one of my clients have taken a employee group insurance. What is employee group insurance versus a normal life insurance? You and I, or your parents or your relative, anybody wants to go take a life insurance with LIC. Premium is 10,000 with the GST or without GST. Today there is no GST because on 22nd September 2025 onwards, all your life insurance premiums are exempt. Earlier, the only government scheme used to be exempted. Micro life insurance used to be exempted. Now every life insurance is exempt except one. What is that is not exempt? Say if you have group life insurance, which means what? There are 20 employees. Okay, my practicing firm is called LDS and Company. We have say 55 employees in Kochi. We decided that all 55 people, we only will provide insurance for them. LDS and Company is paying for the life insurance premium of 55 employees for 1 lakh rupees. Yearly premium 1 lakh plus GST. Will it be exempted? No. Why? It's a group insurance. If the employer is buying insurance for the employee's life, it's called group insurance collectively. Most of the company have this situation wherein they have a group insurance. That group insurance not considered to be, that group insurance is not included in the exemption here. Only an individual buying. Now, whether the group includes a family, like say husband and wife, mother, father, daughter, son, together, family insurance I can take. Will it be group insurance? No. Group insurance means what? Group insurance is not a group who came and then took an insurance. No, it is something else. They are group because they are an employee. So they primarily means employees, right? So that's the wordings that you have here. Let me read it and then close this area of discussion. It's simple. Service of life insurance business provided by insurer to the insured. Insurer means insurance company, to the insured means the customer who is buying the insurance. Where the insured is not a group, where it is not taken as a group insurance. Similarly, not just life insurance, what insurance is also going to be exempted? Health insurance is also going to be exempted, right? They said health insurance business provided by an insurer to the insured, where the insured is not a group, is also going to be exempted. They also said reinsurance of the insurance services specified above. What do you mean by reinsurance? An insurance company is selling this, buying and reinsurance on the same insurance policy. Let me take it out in a example note. Say HDFC Life. HDFC Life is selling life insurance or health insurance. You would find in all the insurance advertisement now zero GST as a advertisement endorsement to a customer. Customer will pay what to HDFC Life? Insurance premium. Is this premium taxable or exempt? This premium is now exempt. Suppose HDFC Life is not selling insurance to a customer. Instead, HDFC Life is providing life or health insurance as a group insurance to Infosys, a company. For their employees. Will the premium be taxable or will the premium be exempted? Premium would be taxable. Suppose this exempted life insurance or health insurance, HDFC Life is buying an insurance from another insurance company. They are getting insurance On the same insurance, they are getting one more insurance from another company, which is called as reinsurance. Buying insurance by an insurance company from another insurance company. If the original insurance is exempted, reinsurance also is exempt. That's the understanding. If the original insurance is taxable, their reinsurance, if a group life insurance is done as a reinsurance, will also be taxable, because group life insurance or health insurance is by default original is taxable. Is this clear, all of you? I would require another yes on the chat box so that I can go ahead and then discuss the next one. Perfect. Let's move to the next exemption. All these are done. Chapter 6, time of supply. It also has an understanding that is already would have been discussed in the previous one. Okay. The understanding was that there is something called as vouchers. The understanding on the voucher is now officially made into the section, which means the vouchers are considered to be either money, or vouchers are considered to be an actionable claim other than specified actionable claim. Therefore, vouchers will not have a separate time of supply. Instead, there is no separate time of supply you need to think about for vouchers. The time of supply would be based on your original provision. That's your primary understanding. Now let's go ahead and then read what it is. Then I'll explain you the structure of understanding. 12.4 and 13.4 was talking about how do you determine time of supply for vouchers. Both of the sections are omitted, which means if you go and then read the Bare Act, now there is no more 12.4 and 13.4 as a section itself. There is no more that section. It's gone. So how do you understand this? Now, if you want to understand details about vouchers, I'm putting out the video that will give you an hour understanding of voucher clarification from the earlier discussion. I will put that a link also for you. What's the impact of vouchers for your examination? Okay, it was already applicable for Jan exam, that's why I'm not stressing too much, but still, since they have not tested that yet, they can actually come and then test you in here. I'm going to give you connected both supply chapter and time of supply chapter will be connected here. There are two types of vouchers. Vouchers are two types. Number one, which are prepaid instrument. This word prepaid instruments are given by RBI. RBI calls certain vouchers are prepaid instruments. Like say for example, Amazon Pay wallet. If you look at Amazon Pay, the Amazon Pay wallet that you can add up, all the Amazon Pay gift card. This voucher is basically like money only. You can go add it up to your wallet and then start using it for any payment. This is like Amazon Pay wallet voucher. Question number one, when some of the vouchers are like Amazon Pay vouchers that I'm talking about, when you buy these vouchers, right? I paid say 10,000 rupees and I bought Amazon Pay voucher and I added this 10,000 into my Amazon Pay wallet. Is sale of these vouchers considered as supply? This is your first question. What's your answer? Can someone answer? This is already something that you would have learned in your earlier understanding. So the answer is no. Why? Because prepaid instrument, I would call it as PPI. Okay, prepaid instrument as defined by RBI is nothing but money. I cannot, and in GST, money is considered to be what? Money is neither goods nor service. To call it as supply, it should either be goods or be services. And if you look at prepaid instrument, RBI's prepaid instrument, they are not goods, they are not service. Okay, so it is not a supply. Question number 2. Mr. A paid rupees 10,000 for purchase of Amazon Pay voucher. Is GST payable? The answer is no. No GST is payable. At the time of what? At the time of buying the voucher. When GST needs to be paid? GST is payable normally by supplier goods or service when when the voucher is used to purchase or avail goods or service. So normally when goods or services purchased or availed, that's when they will go and then get what? Only when they will go and then get GST. So what will be the time of supply? What will be the time of supply? That's it. No special time of supply required. Why? Voucher by itself, this prepaid instrument by itself, would it be considered to be a goods or service? No, it is money. Why would I have a separate time of supply for this? Only when somebody say, I use this Amazon Pay voucher, I went to some shop and I purchased some item, paid by using it. That shop will treat this like a normal consideration, right? It is a consideration basically, like money is a consideration. Okay, consideration can be in terms of money. So it will be a monetary consideration. That seller or service provider will pay GST as usual. No special time of supply needed. So what they have done? They omitted section 12 subsection 4 and in services 13 subsection 4, which talked about a special time of supply for vouchers, which said at the time of issuing voucher you pay GST. There is no GST paid at the time of issuing voucher because voucher by itself is not considered to be what here? Supply of goods or service. Normal time of supply under section 12 subsection 2 or 13 subsection 2 is applicable when goods or service. Earlier we had to pay GST at the time of issuing the voucher. That provision is gone. This is the provision now you have. Is this clear, all of you? Can I have a quick yes if this part is clear? Is this clear, all of you? Yes. Okay. Brilliant. So you guys are getting it. Now there is one more voucher. I said there are two type of vouchers, right? I've just talked about one type of voucher. What is the other type of voucher? I'm going to ask same set of questions for the other set of vouchers also. I'm going to do the in all the classes. Whenever I do this, no, all the students will have a problem if they're copying. They would say, "Sir, you've just copy pasted. What will we do?" Right? Technology, right? So there's another type of voucher which are not prepaid instruments. These vouchers are called as other gift voucher. I'm going to call it as other gift voucher. What could be an example? I can go and then get a Mintra voucher, or I can get from Bata showroom voucher. I can go and buy any gift voucher. See, last time I bought a Louis Philippe voucher. I could buy Louis Philippe shirts with this voucher. Other gift vouchers, Mintra voucher, Bata voucher, LP voucher, all these vouchers are called as other gift voucher. Okay, this other gift voucher. I know that the PPI vouchers are not considered to be a supply. Would the sale of these voucher considered as supply? Same question I can repeat. The clarification gave you this understanding that even if this voucher, Amazon voucher, Mintra voucher, Bata voucher, it's not money, but what it says then, can I call this as goods? No, there is no goods you're getting against this. There is no service you're getting against this. Somebody selling only voucher. Vouchers are also should be treated as an actionable claim. Oh, that concept is something that we have learned in GST. Actionable claims are included in goods. Goods are every kind of movable property, actionable claim, or things that are attached to the earth or forming part of the land which can be severed before the supply. Okay, the beautiful definition we have for goods. Oh, so actionable claim means it should be goods. No. If you have to read it together with Schedule 3, it says what? Only specified actionable claims are considered to be supply of goods or in the entire GST understanding. What? Only specified actionable claim. How many specified actionable claim we have? 6 of them. Betting, gambling, lottery, casinos, horse racing, online money gaming. Again, betting, gambling, lottery, horse racing, casinos, online money gaming. Only 6 of them. Does it include gift voucher? No. So what actionable claim is gift voucher other than specified actionable claim? So they said gift vouchers other than PPI, all other vouchers. Are they supply? They said gift vouchers, they are actionable claims. However, they are other than specified actionable claim. Which means what? Other than specified actionable claims are included in negative list. What is negative list? These are Schedule 3 activities which are neither supply of goods nor supply of service. They are neither supply of goods nor supply of service. Is it considered to be a supply? Hence not a supply. So we can conclude either it is a PPI voucher or it is other than PPI voucher. Whether it is a gift voucher or like Amazon Pay, like a money voucher, either of them are not considered to be what? supply. Now, what if this fellow has Mr. A? You remember the earlier thing? Mr. B paid 10,000 for purchase of Mintra voucher. Mintra application, right? Where we buy shirts and everything. Mintra voucher. Is GST payable? No, it is not payable at the time of buying the voucher. GST is payable normally by the supplier of goods or service when this voucher is used for purchase or goods or service. Same understanding. Now, Mintra voucher by default will not become a supply, but when you use this voucher to purchase some goods, you treat it as part of consideration. But what GST you would pay? You would pay GST under normal provision. So what is the time of supply for this voucher other than PPI voucher? Same time of supply only. What is it? No special time of supply needed. So they omitted 12.4 and 13.4 and said normal time of supply of 12.2 or 13.2 is applicable when goods or service supplied on the voucher. You bought the voucher in January, but you got the product only in April. You will pay GST in April at the time of issuing invoices against this particular goods you purchased on the voucher. Not at the time of what? Not at the time of purchasing this gift voucher. You bought the gift voucher to gift it to your friend on their marriage. You bought the voucher in January. Would the voucher, the company which issued the voucher, Mintra, will they pay GST at that time? No. Keep that money. Now your friend used this voucher in June. Then Mintra is selling you the product. The GST is payable at that time. Is this understanding clear? So they said that extra provision that you had under 12.4 and 13.4, which said voucher taxes payable at the time of issue of voucher, that provision is completely removed because vouchers are not even supplied. So you don't need any special provision for time of supply is the conclusion that you have. Is that clear, all of you? Clear, everyone? Brilliant, brilliant. Okay. So our time of supply discussion is also entirely over. You do have some amendments that comes from your JAN exam. So you have to be carefully looking at that amendment as well. You just have two more amendments to close our discussion on May amendments. Now let's go dive into those two amendments. It's all connected amendments. Okay. So you can see that I have given a lot of charts for you to understand and all from JAN amendments. So I want you to go and then refer JAN amendments, the JAN video. I will put that video also for you separately. Let's look at what is the final amendment that you have, which is connecting your value of supply chapter, as well as this connects you back to your credit note chapter. Okay, both of them will club together and then try to learn. It's one amendment that reading the amendment might not give you so much of understanding because it requires some fundamental basis that you should have understood. So I've given the full circular for you to look at. Okay, so we will read the circular once. I need full attention from all of you so that you understand end to end, right? Okay, I want you to read it with me, then be with me and then try to understand the whole point. There is a clarification on treatment of secondary or post supply discount. I will not only read this, I'll give you examples so that you understand this with full clarity. Okay, but I want your full attention in reading this first. They're talking about post supply discount. So before reading this circular itself, I need a quick recap on what is post supply discount. If you have the books, you open up. If you have our books, the Taxschool books, you open up Taxschool books and then you can refer. Otherwise, you open up ICAI material in your value of supply chapter. You look at the discount under 15.3. Right. So I want your attention going back to 15.3, which is your value of supply discount understanding. Our chart is here. Question that we are asking across is simple. Can discount be reduced from the value? I am the shopkeeper. You came to my shop, you wanted to buy something. You bargained it so much. You bargained so much. Now, since you bargained so much, the product which was priced at 1000, I gave you 800 rupees final price. I gave the bill 1000 minus 200 discount, which gave you a price of 800. Is this 200 rupees discount reduced from value and then GST also needs to be paid on 800 only? Answer is yes. They said for the purpose of computing value, discount can be of two types. Discount that is given on or before the time of supply through an invoice, or discount given after the time of supply through a credit note. This is the understanding that we already have under 15. 15.3a talks about discount given on or before the time of supply. It can be reduced from the value was the first question. They said it can be reduced from value provided it is separately recorded in the invoice. Okay, that's your first thought. Second, even if the discount is given after the time of supply, it can also be reduced from value for your exam, for your May exam, September exam and all. You're going to read like this because there's a further amendment that has come for future exam on this as well. It got updated again, but not for your exam. It can also be reduced from value provided three conditions are satisfied. What are the three conditions that you have? Number one, they said even a post time of supply discount can be reduced from value with three conditions cumulatively satisfied. Number one, this discount should have been existed at the time of supply. Number two, specifically linked to a relevant invoice. Proportionate reversal of ITC by recipient. The saying if three conditions are satisfied, a discount can also be reduced even if it's a post supply discount. Then the question, the discount that is given after the supply, how do you give this discount in a document? They said you issue a credit note and reduce it. Say at the time of issuing, at the time of me selling the product to you, I'm selling a 10,000 worth product to you. At the time I'm selling this product to you, I promised you that if you make the payment within 10 days, I will give you an additional 1000 rupees discount. To induce you from paying early, I promised you a 1000 rupees extra discount. You paid me within 10 days. So now I collect only 9,000 from you instead of 10,000. That's excluding GST. Question is this, can I reduce my outward tax liability also? Can I say that if the value was 10,000, my GST 18% would have been 1,800. Can I now say that value is 9,000 and pay GST accordingly? Right? 9,000 into 18%, which would be 16,620. Isn't it? 1,620. 180 rupees less. Question is this, can I do like that? I gave you the bill initially for 10,000 and 1,800 GST. Can I reduce the value? They said yes. Issue a credit note and you satisfy all these conditions. What are the conditions? I should have promised you the discount at the time of supply and it's connected to a bill. And when I reduce my auto tax liability, say I initially gave you day 1, I gave you a bill for 10k plus GST of 1800. Day 10, I am saying that I want to reduce the value to 9k and 1620 would be the GST 18%. Right? I'm saying you can do that, but what if on day 1 my customer has taken a credit, my recipient has taken a credit of 1800 itself, 1800 itself. They said you reverse 180 rupees from your credit. That's the third condition. ITC on discount needs to be reversed proportionately. If all these conditions are satisfied, you can basically reduce even the discount that is given after the supply from your value. This is the thought process. Is my recap clear to all of you? Can I have a quick yes? So I don't want to go to the next topic without you understanding this part. Okay, it's very important for you to understand what is a post discount that is given after the supply and how we reduce that from the value. Right? Okay. Now I wanted to ask you another question. I'm going to put you some notes here and ask you a further question. Right? I'm going to write something called post supply discount. Suppose there's a company called A Limited. They made supply to Mr. Raju. Raju is our GST learning aid, right? Both of them are registered. Supply was made on 1st Jan 2026. It was for 1 lakh. GST was there, 18%. So 18,000 GST. This is the value at which invoice was given. I'm giving you a agreement. Agreement promised no discount was promised in the agreement. Mr. Raju was supposed to pay how much? It's a credit sale. But no promise, no discount was promised. However, there was a situation with Raju that Raju couldn't sell the product. Raju is also registered. So he was supposed to sell it to customers. Raju couldn't sell the product. Customers, even by, let me just add a date so that you understand this better. Even by 31st of Jan, just like long time, 1 month, no sale is happening. Okay. Now Mr. A is worried. I mean, Raju is not going to buy any more product from me because he's not able to sell this. Maybe because price is the biggest concern for Raju. A Limited, he does something. Now, this is where the GST problem comes in. A Limited calls up Raju, offers 20,000 additional discount. I'm calling this as what discount? Additional discount. Right? Calls up and gives an additional discount. Now, this is where the problem starts. Question, I'm asking you multiple question on top of this case. Question number 1. Can this, so what you tell me, in January, on 1st of January, when the initial bill was given, what is the outward tax liability? 1st Jan, what is the outward tax liability for A Limited? Can you guys put the number on the chat box so that I know that you're with me on the example? It is 18,000, right? Yeah, perfect. 18,000. Can this 20,000 discount, how did you get 18,000 on 1 lakh 18%? Can this 20,000 discount be reduced value for Mr. No, sorry, A Limited when and tax outward tax liability adjustment be made? outward tax liability, OTL, adjustments be made. You make a conclusion on that from your existing understanding. You tell me, can they reduce this value, and then can they, why can't they, which condition is not satisfied? Answer is no. That's a brilliant answer. Why did you have a strong no as an answer? Because one of the condition, this is a discount under 15(3)(b). This is a discount that is given after the supply, right? And what was missing? And not existed at the time of supply. This was not existed as per the agreement at the time of supply. That's the main condition that needs to be. That's the first condition. Yeah, it was never existed in the agreement. It was not existed as per the agreement. So very sad. Like, you can't basically reduce this is the understanding. Not existed as per the agreement. Now, question number 2. This is where it is getting super interesting. So, because of the discount not reducing the value, outward tax liability will remain at what? It will remain at rupees 18,000. Question: is this discount that is given by A Limited to Mr. Raju? Yeah, that's there. GST department says you can't reduce value. You give discount. I have no problem. But don't ask me to reduce your outward tax liability. What is the amount to be paid by Mr. Raju to A Limited after the discount? A Limited has given discount. So, what will be the amount that is payable? Initial bill was 1 lakh plus 18,000 GST. Now they have given a discount of 20,000. There is no value reduction, so there is no GST reduction. This will give what? 80,000 plus 18,000. Perfect. That's also another way to look at. So we said 98,000. That's still payable. Now you carefully look at, on a bill that is given by A Limited for 1,18,000. The bill was given for 1,18,000. The money that is received on a bill that is 1,18,000, the money that is received by A Limited is only 98,000. Question is, can now A Limited cannot say that I still have 20,000 receivable in my books of accounts, right? I need to make my accounting clear. So can A Limited issue any document to adjust? Okay, see, I can give a document to document I need to give to Raju and say that, Raju, don't pay me 20,000. I'll adjust this. Okay, you please sell it for a discount or something. I don't want you to have the product lying with you till for a whole month. You're not sold it. Please do something. Can they do like that? Yes. They will issue something called as commercial credit note. Can they issue commercial credit note? To adjust. Adjust the product consideration. Yes, they can do that. However, it is not considered to be what? It is not a GST credit note. If it is GST credit note, it would reduce what? Value. It is just a commercial credit note. Like saying, I don't need to pay me money. It does not reduce the value. For whom? Value for A Limited. Understanding? So how much is the Outward tax liability of A Limited still 18,000. So, question is this. Here is where the new clarification on this much, please remember, is not a change. These are things that was already there. All the understanding, if at all wasn't from my classes, this much understanding you already have, because we have had extensive discussion on this in our regular batch or workout batch. Now, your additional understanding would be from something else. My next question is going to be where your May exam amendment clarification starts. But I have a preface now that you just have to additionally learn something. Can I ask you the next question? Next question. Since A Limited did not adjust outward tax liability, should Mr. Raju reverse ITC? On the invoice? That is, can Mr. Raju avail full ITC? Rupees 18,000. This is my question. Here is what this fellow, Mr. Raju, is not paying the full amount. Raju is basically paying how much? Raju is only paying 98,000. Question is that can he take the full credit of 18,000, because he is not paying 1,18,000. But at the same time, if you look at A Limited did not pay lesser liability. Government, should the government be worried about giving the credit to him? Because government did not allow A Limited to reduce the outward tax liability. Can Mr. Raju still take the full credit? Yeah. Let's look at this from our clarification number 1. Look at the point here. Clarification question number 1 is this: whether full input tax credit is available to the recipient of supply when recipient makes discounted payment to the supplier of goods on account of financial or commercial credit note issued by the said supplier. I know that as and when I read this question, you need not read this full. So I'm going to read it once again so that you understand this. This time you're reading it with full clarity. On with me, you're reading the question. What's the question? Whether full input tax credit is available to recipient. In our case, who's the recipient of supply? Mr. Raju. When the recipient makes discounted payments to the supplier. Okay, so he paid only 98,000 on account of financial or commercial credit note issued by the said supplier. Is he required to reverse any credit? Look at all the 3 clarification. Point number 1. Section 16.1. Section 16.1 talks about ITC, right? Section 16.1 of CGST Act 2017 provides that every registered person shall be entitled to take credit of input tax charged on any supply of goods or service or both which are used or intended to be used in the course of furtherance of his business. Point number 2. It has been clarified via Circular 92 on 7th March that supplier of goods can issue commercial or financial credit note, and in such cases he will not be eligible to reduce his original tax liability. Understandable, as the transaction value is not allowed to be reduced on account of issuance of financial or commercial credit note. Accordingly, tax charged from the recipient would also not get reduced. 3. Thus, it is clarified that recipient will not be required to reverse input tax credit attributed to discount provided on the basis of financial or commercial credit notes issued by the supplier, as there is no reduction in original transaction value of the supply, and accordingly the corresponding tax liability would also not get reduced. What is your understanding? Should he reverse the input tax credit? No need to reverse, because the supplier is not reducing the value, supplier is not reducing it outward tax liability. Only in that case, recipient needs to reverse the credit. Only in case of a GST credit note, recipient will have to do what? Reversal of ITC. In a commercial credit note, since supplier is not reducing value, recipient can, even after giving a commercial credit note and reducing the consideration, is he eligible for full ITC? Yes. No need to reverse ITC. That's a clarification. Mr. Raju is eligible for full ITC. Mr. Raju is eligible for full ITC. Of how much? Full 18,000. Just because of commercial credit note, no need. Is it clear, all of you? Can I have a quick yes from everyone, please? These are points which can actually come in your examination, so you should have full focus and then full clarity to the entire case. All right. Now let's move to question number 5. Before question number 5, I want to modify this example a little bit. Okay, I hope that's all right. Look at the example here. I have taken this example to explain this concept. Let's say Raju is purchasing this product for 1 lakh. Answer me. When Raju is purchasing the product for 1 lakh plus GST, when he is also a registered person, will he be selling the product to customers for 1 lakh itself, or he will add his margin and then sell? He'll add his margin. Raju normally sells product to his customer at rupees 1,50,000 plus GST. That is the price at which he sells the product to the customers. Okay, I'm just adding up another point to the example. Now I'm asking you a question. Was he able to sell at this price until the end of the month in our example? Was he able to sell till 31st of Jan? No. 1 month he quoted the price and then put a board also there. This is for 1,50,000. He was not able to sell at all. Right? He was trying to mark up for 50%. Nobody purchased the product. Not able to sell. Right? Now what is the solution? What is the sales promotion that A Limited is thinking about? Limited said, hey Raju, don't pay me 20,000 also. Do something da. Please offer some discount, something you do, and then sell it to the customer. Now, since by 31st of January, A Limited calls up Mr. Raju and offers this 20,000 additional discount, what Raju decided? After this discount was given, Mr. Raju decided to finally sell product to customer at rupees 1,30,000. What he did, he said, hey, I'm still making money. Like, I'm getting 20,000 discount. I can actually pass on that benefit to the customer. Maybe if I keep it at 1,30,000, I will be able to maybe convince the customer to buy this. This is a good discount available. So he said, hey guys, purchase this particular product, 20,000 discount available. And Raju was very lucky. He got a customer also. Are you guys understanding? Is that example clear? Okay. Now I'm asking a question. This question itself is a little confusing. I'll first draft the question, then we will look at the clarification. Assuming Raju sold the product to customer at rupees 1,30,000 after getting commercial credit note of 20,000 from whom? A Limited, right? He was able to pass on this benefit. Assuming Raju sold the product to customer at 1,30,000 after getting commercial credit note of rupees 20,000 from A Limited. Can this be treated as? Can this commercial credit note be treated as consideration for inducement of sale of goods customers at 1,30,000? What's the meaning? Can I say the value of goods by Raju to customer? This is an odd way in which I'm analyzing this. I'm saying Raju to customer value is not really 1,30,000. It is plus 20,000, which is commercial credit note. Why? Because of this commercial credit note only, I was able to sell this product to customer at 1,50,000, 1,30,000. So this 20,000 is a consideration for selling to the final customer. 1,30,000 comes from final customer. 20,000 credit note comes from my supplier. A Limited 20,000 credit note. 1,30,000 from customer. The value of this supplies. Hey, not at all. Can I treat it like that? Not at all. Clarified. It is not a consideration. Can I say it is a consideration for further sale? I cannot. First of all, why would see already you tried the value, you cannot reduce the value. So value is 1 lakh for the sale to Mr. A Limited to Raju. Now Raju sold it to customer at 1,30,000. How can I say this 20,000 is actually a consideration for this sale to the customer? Because of the wordings that we have in the definition of consideration. That gives us a different thought. Different officers will think in different thought process. Why? Because consideration can be money or otherwise for the supply. It could be an inducement. Money that is an inducement is also a consideration, it seems. So can I say, okay, this 20,000 I paid to Raju. Why? Because I want Raju to sell to the customer at 1,30,000. So there's a contract that I promised to sell it to the customer at 1,30,000 through Raju. So I gave Raju 20,000. Customer gave 1,30,000. Can this kind of a thought be given? The answer is no. You cannot treat it like that. Why? They've given multiple clarification on thought of this. Why? The product is now, the moment you sell the product, the moment A Limited sells the product to Raju, who is the owner of the product? Who's the owner of the product? It is Raju who's the owner of the product. So who decides? Who decides whether he should sell it for 1,30,000 or whether 1,50,000 only? It is all decision of Raju. So the clarification also gives you further point. Point number one, once A Limited sells the product to Raju, it is Raju. It is Raju the owner of the product. Also, there is no contract between A Limited and final customer. Whether A Limited will also know who's the final customer? No, Raju will not even tell which is the final customer who bought the product. So how can I say that A Limited wanted the product to be sold to this customer at 1,30,000? I cannot say like that. Okay, so there is no contract between A Limited and final customer. Hence, this credit note, commercial credit note, is not a consideration. It is not an inducement for further sale. No connection with further sale. Those interpretations are not correct unless A Limited has a direct contract with the customer. Say that I have to sell. You have to Raju will sell the product to you at 1,30,000. I'll give Raju 20,000, and the customer will give 1,30,000. If there is a contract like that, we can say. Unless there is a contract like that, this interpretation is also not correct. This is the second question they were asking in the circular. Can we all carefully go and then read this particular understanding once again? Can we go and then do that? Very interesting way of putting this across. Let's do that. What is second question? Look at the question on the screen, everyone. Point by point we'll read. Whether post-sale discount offered by manufacturer to its dealer or distributor, let's say A Limited is a manufacturer, Raju is the dealer or distributor, would be treated as a consideration paid by manufacturer for the dealer's supply of the same goods to end customer as a monetary value of inducement to the supply of goods manufactured by him to the end customer. You say, can I say this 20,000 is an inducement for selling the goods to the end customer at a certain price? They said no. Now look at the point by point clarification they have. They said Section 231 of CGST Act, this is where the confusion comes in. It defines consideration. What is the definition of consideration? Says consideration includes monetary value of any act for inducement of supply of goods or services, whether by recipient or by any other person. In case where there is no agreement between the manufacturer and the end customer, there are two independent sale transactions, one from manufacturer to the dealer and the other from dealer to the end customer. The essence of the matter is that in a contract of sale, the sale is completed when transfer of title to the good transfer of title to the goods to the buyer. Okay, sale is completed on transfer of title to the goods to the buyer. So they're saying in a normal sale transaction, sale is over when it is sold by A Limited to Raju. Once this happens, buyer becomes the owner. Then who's the owner? Buyer is the owner of the goods. And seller has no vestige of title or claims therein. Once A Limited sells the product to Raju, then there is no way that the seller can actually tell Raju to do anything else. Dealer takes ownership of the goods purchased from the manufacturer, subsequently sells them to the end customer, and transaction between manufacturer to the dealer operate on principal to principal basis. These discounts are simply given for competitive pricing to push sales, merely reduce the sale price to the goods and are not linked to any independent activity rendered to the manufacturer. Therefore, it is clarified. This is the point that you have to remember, that we have finally clarified. It is clarified that such discount cannot be included in the consideration as monetary value of inducement for further supply of these goods. Is that clear, all of you? Can you add this 20,000 to the further supply consideration? The answer is no. However, when manufacturer has some agreement with end customer to supply goods at a discounted price, manufacturer may issue commercial or financial credit note to the dealer, enabling such dealer to provide the goods at an agreed discounted rate to the end customer. Therefore, it is clarified that such post-sale discount given by manufacturer to end customer, manufacturer to the dealer for supplying goods to the end customer at a discount rate should included in overall consideration, as it is an inducement towards the sale of goods by the dealer to the end customer. When can I include this? Only if A Limited had a certain agreement with end customer that I will give you the product at 1,30,000. 20,000 I will give it to the dealer and you give 1,30,000. If there is a contract like this, only I can say the further sale value should be including the commercial credit note of 20,000. Otherwise, further sale value would still be only 1,30,000. 20,000 is not a consideration for the same. Is that clear, all of you? Is that clear? Now, let me add another example to it. I'm adding another variety to it. Question number 6 on top of it. Assume Mr. Raju is also an influencer. A Limited wanted to advertise their product through Mr. Raju. Social media. They agreed for rupees 25,000 as fee for the same. Instead of paying this rupees 25,000, see, why would I pay again? Because Raju anyway has to pay 98,000 to A Limited, no? What A Limited said, see, I want you to do a Instagram promotion for me, 25,000 I'll pay you, but I'll not pay you in cash. Instead of paying this 25,000, another commercial credit note of rupees is issued by A Limited to Mr. Raju. Question: is this commercial credit note considered to be a consideration for a supply of service? Tell me, will it be a supply of service consideration? Give me clear answer. Think about it and tell me. What do you think? Carefully think. Otherwise, this could be an easier option. Raju is now doing what? Putting some advertisement services for A Limited. Carefully read this. Raju said, I'll put, okay, this post for you, do this for you. I need 25,000. So Raju is doing certain activity for A Limited. So Mr. Raju is also an influencer. A Limited wants to advertise their product through Raju social media. They agreed for 25,000 as a fee for the same. Who agreed to pay to whom? A Limited agreed to pay Raju. But Raju said, hey, I have to pay you 98,000. No, why? Because I have bought this product from you. You gave me a discount and all that. I still have 98,000 payable. So you found out how much is payable here, right? In question number 2, what is the amount to be paid by Raju? Raju said, hey, you don't pay me 25,000 and then I pay you 98,000. Instead, what do you do? I'll pay you net. Net means what? 98,000 minus the 25,000 you are supposed to pay me. What is net now? So 73,000 I'll pay you. So 25,000 what is again not paid? What is that they will issue? They will issue a commercial credit note again. So question is whether this commercial credit note for 25,000 is treated as a consideration for a specific service provided by Raju. What is your answer? I want answer from everyone. So it should be crystal clear for all of you. Think through. Logically you think through. Then you will understand. Is there a specific agreement for a service to be provided by Raju here? Yes. What is that agreement? They have to provide certain social media influencing service, right? Some marketing services being provided. So here we would treat it as Mr. Raju is providing marketing service. To whom? To A Limited. To A Limited. And A Limited gives what? A Limited gives commercial credit note. Right? A Limited gives commercial credit note for 25,000. Is it treated as a consideration? Yes. Yes. It is a consideration here. Who's a supplier? Who's a recipient? Supplier is Raju. And recipient is A Limited. This is a separate supply. Right? This is the third part of your clarification. They're asking the question. Third part of it. What it says. Whether post-sale discount extended by manufacturer or dealer can be treated as a consideration in lieu of an activity performed to promote the sale of goods. The matter has been examined. The dealers receive such post-sale discount. They may engage in promotional activities to boost the sales. However, these activities ultimately enhance the sale of the goods that dealers themselves own, thereby increasing their own revenue. A normal activity will not be. Right? Normally, I would pass on the discount and all that is not a specific activity. In this context, the discount merely reduces the sale price of the goods and are not linked to any independent services provided to manufacturer. Normal cases. Therefore, it is clarified that post-sale discount offered by manufacturers to dealers in such cases is not treated as consideration for separate transaction. Normally, just because they pass on this discount to the customer, for that they put a poster, these are not a separate activity. However, look at the second point. Our case is second point here. However, GST would be leviable in cases where dealer undertakes specific sales promotional activities such as advertising campaign, co-branding, customization, special sales drive, exhibition arrangement, customer support service. They are providing a specific service. Only when such services are explicitly stated in the agreement which clearly define consideration payable for such supply. In this case, we have what? A specific agreement which says 25,000 is payable for Instagram posting. Such cases, dealer provided distinct services to the supplier, GST would be chargeable. Is this clear, all of you? Can I have a quick yes? Because it's a long circular. I've discussed a lot of part of this. So it should be clearly understood by you. Okay. Now look at the last amendment that you have, which says what? It talks about something called as credit note. We are now talking about what credit note? A GST credit note, not commercial credit note. Now the last circular is on GST credit note. GST credit note. VKC Limited sold product to two people. First person, a dealer, Mr. Gopal. Also to Mr. Rahim, he is a final consumer. He directly come, he is not registered, he is a final consumer. The dealer is registered, this fellow is unregistered. Sale happened for 10,000 plus GST 18%, 1,800. What did this dealer do? Dealer returned the product. What is that the VKC would do when the dealer returns the product? VKC would issue a credit note. What? GST credit note. Right? When VKC was, I'll just put the final consumer on this side. Now, when VKC was issuing credit note, initially you look at, say this happened on 1st Jan. The credit note issued on 15th Feb. 1st Jan, the dealer would have taken an ITC of how much? 1,800. Right? What was auto tax liability at that time for VKC? 1,800. This particular credit note is for return, not even discount I'm talking about. Return and credit note was issued. When can, so what VKC wants to do what? VKC wants to reverse or reduce auto tax liability. Why? Product is given, it came back, the sales return. It's a normal case, sales return, credit note is issued. They put a condition. They can do that only if Mr. Gopal reverse the ITC. Right? Otherwise, government is losing money. That's it. The outward tax liability can be reduced on consequent to credit note only if Mr. Gopal reverse this ITC. Because if the Gopal reverse ITC, government will allow VKC to reverse the outward tax liability. VKC sold another product on 1st of Jan, which is to Rahim, 1,000 rupees worth of product. GST was 180 rupees. What is auto tax liability for VKC here? 180. Mr. Rahim reversed the product. Sorry, Mr. Rahim returned the product. Now VKC wants to issue what document to Rahim? VKC wants to issue a credit note. And reverse auto tax liability of 180 rupees. Now, Rahim would have given how much money at that time? Rahim paid 1,180. Now, VKC is saying that Rahim, I'll give you only 1,000 rupees. Why? VKC is saying, hey, I paid 180 rupees as GST already to the government. So, I'll give you refund. I'll refund 1,000 rupees back to you. And VKC is going to the government and say that, hey, government, I got the product as return. Can I reverse the 180 rupees outward tax liability? No. You can reduce outward tax liability with a condition. Only if GST is also refunded. Back to customer. It's very simple. No, you get the GST amount also back to the customer, then you can reverse your auto tax liability. Otherwise, you are benefiting out of it. Every return happens, you are making 180 rupees. You reduce your liability, you pocket from the customer 180. No, you reverse 180 also. Then only you refund 180 also. Then only I will allow you to reverse the ITC or reverse the auto tax liability for you. So VKC said VKC can reduce his auto tax liability only if the recipient is registered, he reverse the ITC, or if the customer is unregistered, what needs to be done? He should not have passed on the incidence of taxes. Means what? Ultimate burden of taxes should not have been given to Rahim. If ultimate burden of tax is already given to Rahim, you cannot reduce your auto tax liability. If taxes collected from Rahim and then paid, then you should refund the taxes back to Rahim, then only you can reduce your auto tax liability. That's the double benefit mechanism should not be done. This is the condition they have added in 34.2. So if you read, you will understand. Credit note provision says no reduction in output tax liability for supplier because of credit note is permitted if input tax credit attributable to such credit note, if availed, has not been reversed by recipient. If recipient has not reversed the ITC, then if the recipient is when recipient is registered and recipient has not reversed ITC, then supplier cannot reduce the auto tax liability. Similarly, if the recipient is any other person, means what? An unregistered person, then what is that should not have done? If the incidence of tax is already collected and then never refunded back to him, then you cannot reduce your output tax liability. These are the two additional points they have put as a condition here. I hope this example is clear to you. So we've finished all the amendments that was there for you for your May examination. What you have to do is just watch out for your RTP, because RTP will have some questions which is on the amendments. Also go back and refer the Jan amendments, which I have already uploaded a video. I can send it out in our Telegram channel if you guys need, so that you can have a comprehensive learning of this. And I really hope that our session was useful for you. If it is useful, please give me a big thumbs up on the chat box, and I'll also share all the examples that I have put here. I will put that, these examples that I've written here, I will put that into a PDF and I'll upload it in Taxschool free resources so that you can read it up, right? Thank you so much for your patient listening throughout the session. I've extended the time beyond the promised one, but I hope it was helpful for all of you. Okay, thank you. All the very best for your examination. Be in touch, and we already have other batches that's already going on. So if you need any of those, of course, you can watch out on our YouTube and I'll help you out there. Okay. So thank you once again for your patient listening, and all the best for your exam.